Let's bring in Rob Lauzon for his take on equities. Before we get going, Teck, where do you think this one ends?
I think it goes down the path of where management and the Keevil family wants it, where given their controlling stake, majority voting stake, you'll end up getting this coal spinoff, which, my first, gut feeling when I heard about the coal spinoff was, it's going to be good for ancillary businesses like West Shore, who moves that coal off the port, because I think once they've isolated it, it'll have, longevity. But where I think it's probably best placed is within private equity. So it's not publicly traded. It's going to have, it's met coal, so it's what's used to build buildings and steel. It's not thermal coal, which is burnt for electricity. However, it'll still be painted with that brush. So I think if it's off the stock exchange, not publicly traded, it's a cash cow. So I think private equity is the best spot for that. So that'll be interesting to whether they end up spinning it off or selling it to private equity before the spin-off. But I think Teck as a Canadian miner, the way that it's been planned out is probably the way it stays. And I think Glencore is not successful.
One interesting governance thing I think here is, so they spin off the coal and say it gets taken over by private equity, but the coal operation is on the hook to pay vast amounts of cash flow to Teck. And I wonder, would private equity owners of the coal company be happy with that? Would they just be stuck with it? Yeah,
I guess there would be some sort of agreement, repapered up, and the stream of cash flow is valuable to each party. So there's going to be a price for everything, and you might need to rewrite that if it's done prior to the spin-off, right? So, but yeah, no, it's front page news, something to watch here the next couple of weeks.
What's your view on the markets? Are we past the worst of the banking fears? I know it's very hard to predict. Anything could pop up at any time.
Yeah, I think we are, because of what the Fed has really done again. The Fed put is back for regional banks, where they will essentially, implicitly guarantee the deposits through these, mechanisms where they can put assets to the Fed, whether they're trading at 90 cents on the dollar, the Fed will give them par value for them. So the big risk near term is two things. One, earnings expectations, because deposits have come out of banks in the U.S. in particular, where they were just sitting there earning less than 1%. And this front page news on the crisis has, woke people up to say, well, I could actually take that $17,000 I've got earning nothing and move 15 of it into a money market fund earning 4%. So that is actual deposit outflow out of these banks. So that could hurt loan velocity and earnings. Second is just, what's the new regulatory regime for banks? Is there going to be a cap on dividends being able to be paid by regional banks? So the chairs might move around here for the rules, and we've kind of stepped to the side to watch, and we'll get back in at some point. So right now, the safer places to be are the large banks that are reporting at the end of this week. JP Morgan, next week we'll get Morgan Stanley. Those type of names should benefit from what we've seen here in the last month.